Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Brian O'Donnell, co-founder and head of distribution at BondBloxx, as well as Jonathan Shelon. He's COO of KraneShares. We're here to discuss accessing private markets through the ETF wrapper. It's great to have the both of you with us. Welcome to Trade Talks. And Brian, let's start at a higher level here and talk about different areas of the private markets. What exactly is private credit?
Yep, quite simply, Jill, private credit is private companies that are borrowing outside of the public bond markets, essentially. And it's most companies that are public obviously borrow in the public markets. There are actually way more private companies in America, as you can appreciate, and it's those companies that are borrowing through the private markets.
Got it. And then on the other side, private equity. How would you describe that?
Sure. Well, very similar to the private credit explanation. These are private companies, sometimes younger companies, other times more mature, that are accessible privately. You can't buy them on an exchange like Nasdaq. And what we've seen is over the decades, the number of public companies that exist have actually shrunk. When I was a rookie analyst, the Wilshire 5000 had 7,000 companies in it, and now it has 3,000. So companies are staying private longer, not listing as fast, and it creates a lot of opportunity outside of the public space to invest in private markets.
So why do you think investors, advisors are thinking about accessing the private markets through an ETF wrapper?
Yeah, I think that one, if you think about traditional ways to access private markets, you have to buy a private fund. Those private funds tend to have high fees and illiquidity. So if you're able to access even a portion of the private markets through an ETF wrapper, you preserve liquidity, and ETFs are cost effective.
Yeah, and Brian, it's private credit. There's multiple areas of that. So your ETF PCMM, you're focusing on middle market companies.
That's correct. Yeah. So private credit is a very broad space. It's actually over a $2 trillion market. It can be anything from middle market loans to private companies to direct lending to consumers, to even things like music royalties, believe it or not. And in essence, private credit is the kind of the intersection of fixed income and the alternatives market from an investor's perspective. And yes, for what we're doing in PCMM, which is ticker for our private credit ETF, is we're actually buying CLOs that are packages of middle market loans across different credit ratings. And we're packaging that up into an ETF.
So you could see why the ETF wrapper would certainly be more an efficient route to do that. I mean, not even just from a cost perspective, but understanding the types of investments that should go into the wrapper. Yeah,
the transparency, and I think Jonathan hit it correctly. There's a few things. So first of all, there's diversification by buying this way versus going to maybe a single private credit issuer. The different wrappers that are available to investors through interval funds or BDCs or things like that are much less liquid and tend to be much more expensive and less transparent. And the liquidity is a big factor, as you can appreciate. Yeah. The efficiency, the transparency, and the liquidity of the ETF is obviously an enormous benefit, especially in this space where investors who are investing through other wrappers, if you will, may not have very much liquidity at all, or maybe quarterly liquidity, and just not have very easy access to their investment capital.
And they're also used to liquidity via the ETF wrappers.
That's right.
Yeah.
That's right.
You don't want to think about going into the private markets and oops, can't get my money out or move it around. So this makes it accessible to them again in a space that's perhaps more complex than indexing to the S&P or Nasdaq 100.
Well, you raise a great point to access. Historically, to invest in a private company, you have to be a certain type of an investor, maybe an accredited investor. So by also placing these investments inside of an ETF, you make it accessible, the overused term is democratized, but you make it accessible to a whole new set of investors that have historically missed out on that diversification.
So let's talk about that for a moment here. KraneShares, right?
Yes.
The AI and Technology ETF, AGIX.
That's right.
That goes beyond the Mag 7.
It does.
And that exposes investors to ideas what other kinds of ideas, in other words?
Yeah, sure. So we started studying AI about 3 years ago, and we looked at the Mag 7 because the performance was spectacular, and we were starting to try to understand AI more thoroughly. And we realized that AI is a revolution, and it will follow a lot of the trends that we saw in these super cycles with things like the Industrial Revolution or railroads or even the internet. And there are three segments. There's hardware, which are like the chip makers. There's infrastructure, which are, like the what are called the hyperscalers. These are the firms that have the data centers and the servers. And then there are applications, companies that will actually use AI. Well, you can get hardware right now through an ETF. Those are the chip makers, NVIDIA, SK Hynix, and others. But in the application space or in the infrastructure space, you have all these large language models, companies like OpenAI, Anthropic, xAI, Perplexity. Those are only available privately. So if you're going to invest in AI in a thorough way with an eye towards the future and how things evolve, you really have to have some portion of your AI investment in those private companies. And that's what we do in AGIX.
So the manager gets direct exposure to that within the ETF wrapper, and that's where the ownership is.
That's right. Yeah, we were able to purchase Anthropic. It was our first private investment as part of their D round, and they subsequently did an E round, which increased the value by about 3x, which was meaningful. And then we did a tender offer for xAI earlier in the year. So it really is meaningful and it's important, and we think it's part of the thesis.
Yeah. Brian, how should advisors and investors approach investing in private credit, and considering there are different types of wrappers as well?
Yeah, well, from an ETF perspective, again, a lot of things that we already talked about, the ease of access, the convenience. For high net worth investors and or the advisors that are advising those types of investors, there are obviously multiple avenues that they can take. The things to consider obviously are who the actual manager is, the diversification in that portfolio, some of the things like we talked about for liquidity, and then leverage is also a factor. So in certain paths of investing in private credit, the manager might be adding leverage to it. For our product in our ETF, there is no leverage in that. That is another thing that I think is appealing from a risk perspective as it relates to the ETF. And then another factor that we hear a lot, especially from advisors and from high net worth investors, is actually a lot of paperwork involved in investing in certain ways in private credit, which again, the ETF, because you're buying that on exchange, is just another ease of use of investing through the ETF.
How is PCMM different from other types of private credit ETFs?
Yeah, there are a few. We're proud at BondBloxx because PCMM was the first to offer exposure to private credit, and it is a pure exposure to private credit. So some of the other ETFs that are out there, they're actually mixing public and private investment grade into the portfolio, whereas PCMM is a pure exposure to the private credit market, again, through these CLOs. The private credit CLO market is actually one of the fastest growing areas of the market. The CLO market's a very large market to begin with, but the fastest growing area within the collateralized loan obligations is in private credit. And there are quite a few of the names that you know that are out there, the Blackstones, the Apollos, the Ares, the Blue Owls. They are all issuing these CLOs, and then we are buying those CLOs into the portfolio across different credit ratings.
Got it. So now with AGIX, you can hold up to 15% of exposure.
That's right.
To private markets. Is that what the differentiating factor is? Trying to find those hidden gems?
Yeah, so I'd say the two things that really make AGIX different in the marketplace is one, the private exposure up to 15%. That's an SEC rule, so that's required for ETFs like ours. But the other one is we've also come up with a methodology that takes you beyond the Mag 7. Mag 7 only represents about 25% of our portfolio, and then we also have another 50% of the portfolio outside the Nasdaq 100. In other words, we've globalized the mandate, so we have companies like Nebius in there, SAP, global firms that will also benefit from AI adoption and AI relevance.
Yeah, so when you're thinking about the allocation itself, what's the recommendation for, and granted everyone's needs are different, but having private market exposure?
Sure, yeah, I mean, look, we think that this is a really good starting point, that if you're going to invest If you don't have access to private market exposure otherwise, we know that very sophisticated endowments and foundations will invest significant sums in private markets, maybe upwards of 50%. But for an individual that doesn't have an infinite time horizon, having a smaller amount makes sense. So we think a 10 to 15% allocation of private markets within an ETF is very prudent.
Yeah, and that's the same with you, Brian, as well. When you're considering adding private credit to your portfolio, what would be, a prudent exposure to that?
Yeah, I think it could be similar. I mean, we hear ranges, obviously. I'd say that the benefits of owning private credit in the portfolio, or for the case of PCMM, it's yielding 7.5% with historically very low volatility, and it has very low correlation to both public equity and public fixed income markets. So you're getting a great diversifier there. You're picking up yield, and there's a lot of things that portfolio managers are using to manage risk by owning PCMM in their portfolios, and the range could be anywhere from 5 to 10% to 20%. Mm-hmm. The other thing that I would point out is that model portfolios is a very, very large market. Over $2 trillion of ETF assets are in model portfolios here in the United States. And the benefit of either of these products is that now you can bring private equity or private credit and put that into an ETF model for a more, I would say, a more fulfilled asset allocation.
Yeah, I would imagine it's also incumbent on the industry to make sure investors and advisors are educated on the nuances of the private market space, because we hear a lot. The more it's on financial media and the word gets around, you want to make sure that you're not getting FOMO and trying to get exposure for the sake of without understanding, the actual investment case.
Mm-hmm. That's right. That there's a complexity here that historically was limited to a certain group of investors, and now everybody has the benefits of private investing, but should also understand the risks.
Yeah. Like private family offices used to get those huge decks once a quarter, once every 6 months, analyzing, your exposure. I used to make them very early in my career. So
and now you can go to either of our websites on any given day and see exactly what's in that portfolio. So again, we've talked about that transparency, but that's a huge benefit to be able to see what's in it, to understand, in our case, what the credit exposure is to it, the duration, and a lot of the other things that any advisor or any investor would be thinking about when they're putting anything into their portfolio.
And a daily net asset value to buy and sell.
Yeah. Intraday pricing.
Yeah, so the accessibility and transparency is really the use case here. Yeah. All right, appreciate both of your insights. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.